Hello and welcome to the ASB Investment Podcast, the show that keeps you up to date on the markets and helps you make smart choices with your investments. These are entirely our own views and that of our guests. It's not investment advice, but we know plenty of experts at ASB that will be happy to chat if you need. Well, hello and welcome to another edition of the ASB Investment Podcast. Today we're focusing on the financial lives of Gen Z, which are young New Zealanders aged 18 to 25. Gosh, I remember that. It feels like a lifetime away. The new generation upon which all our hopes and dreams depend on, no pressure. We did a similar one of these kind of age-specific deep dives for listeners, for those in their 40s a few months back, and had good feedback that themes like this would be good to discuss too and go into a bit more detail. So here we are with our special guest today, returning champion for another chat, Kirk Hope, who's the Chief Executive Officer of the Financial Services Council. He's here to unpack their latest research and insights from the Financial Services Council, or FSC, if I use that for the rest of the podcast, their recent Money You report. Kirk, thanks for coming back. How have you been keeping?
As always, it's a pleasure. I am in great form. Thank you, Nigel.
Oh, I like that. Was a very matter of fact. I am ready to perform. And so just to clear, something up for listeners, I hate to break the illusion you might have, but neither Kirk nor I are still in our 18 to 25s. I've made that assumption, Kirk. Is that correct?
That's absolutely correct.
So what we'll be talking about today is from the perspective of what the research is saying and kind of our thoughts, what we're hearing. So in the new year, we're aiming to get back some real-life working examples of 18 to 25-year-olds with their whole lives ahead of them to come in and kind of test out what some of the research is saying here and give us their perspective. So with that, let's start with financial confidence. The report notes there's been a drop in confidence levels amongst this group, the 18 to 25, when it comes to managing their money and making big financial decisions. And in fact, only 35% feel extremely or very confident, down from 42% a couple of years ago. Kirk, why do you think that confidence is falling? And does it mean anything material for young people's financial futures?
Great question to open with. I think for a lot of that cohort of people, what they're doing is they are experiencing coming into the workforce for the first time. They probably wouldn't have had a lot of exposure to financial products, so they are a bit more apprehensive about them. They'll be doing things like buying their first car and thinking about, okay, how do I pay for it? Also, I mean, let's not, particularly with that drop from 42% to 35% confidence, you can't over or understate the consequences of a tough economy, particularly on this cohort of young people. So that's probably having, again, some form of impact on their confidence in terms of decision making. But some good stuff. Around 50% of 18 to 25-year-olds are enrolled in KiwiSaver, and 96% of those people that are enrolled are actually contributing. So,
which is better than the overall base, isn't it?
Way
better.
Firstly, they're probably the first cohort that have had KiwiSaver as part of their thinking for their whole life. If you think myself, I was in my 30s when KiwiSaver came in. Oh, that's giving away how really old I am, but that's okay. Again, if you think about what you hear about the housing market in New Zealand, it's really challenging for young people to get into houses. KiwiSaver is a way to start to save a deposit to get into the housing market. You also think about what's been going on in traditional forms of savings, where we've seen pretty low interest rates for a reasonably long period of time. So that's probably sparked a bit of interest, not just in KiwiSaver, but in other areas where you're seeing quite a lot of growth, particularly platforms like Sharesies and Hatch, where particularly young people are getting into that, starting to build their understanding and confidence around those types of things.
Okay, so you kind of described there that some people are finding potential platforms to use or other areas to start their adventure, maybe on saving or building a deposit base or improving their financial literacy. What do you think, is there anything in the research, or what do you personally think around the role, financial education or professional advice can play in improving that confidence?
Financial advice is probably one of the critical components that can make up the gap between confidence, knowledge and understanding. Mm-hmm. And again, once people start to engage with the product sets, whether it be in investing or in insurance, and they start to understand the benefits of those products, that builds their confidence. If one of the interesting pieces in the research that we did, and it's not directly related to your question, but it is interesting that more New Zealanders insure their cars then ensure their health and their life. So if you think about your primary asset, which is yourself, particularly from an earning perspective, that is quite remarkable. This generation is not different in that perspective, but I do think there's a couple of things which are changing. Firstly, I think providers are getting far better at communicating to their segments and to particular cohorts of
in a
people.
way that's like authentic to them, or as opposed to a carte blanche.
Yep, much more. And you've got the role of financial influencers, if you like. You've got the role of social media. Now, some of that's good, some of that's bad, because some of the material is spurious. So you got to take some of that with a grain of salt. But the fact is, young people are talking to themselves a lot more about these things, which is good. The other thing, which I think it probably flew a bit under the radar, except in the financial services sector, is that the government has now committed to making financial education a core part of the curriculum. So that, again, helps build an understanding about what's going on, builds financial confidence, or enables the opportunity to build financial confidence in a way that gets people, once they're at 18, across the starting line much faster. There are some other things that have been talked about. There's a few commentators who are talking about the government investing for every New Zealander that's born a particular amount of money, so that when
the
they
US
get to
has just done something like this, I think.
So there are some things which can help for individuals to build their interest, so that they're not absolutely new to it at 18 when they get into the workforce. So they are starting to build understanding and capability before that.
Yeah, and there was certain nerds like me maybe in high school that were looking at Mary Holmes' pages and the Q&As in the Herald on what to do financially. When
studious, Nigel.
Well, studious. I didn't have the biggest social circle. But I guess it's extraordinary when you describe that. Like you've got some major decisions to make when you go into uni or in and around that time. And if you haven't done it in Scott, you did maths, you did reading, you did all these things. But if you didn't do financial literacy,
a useful thing too is some of the language. I think we've moved on from the financial literacy languages because, I think this is about financial education. It's that, it's a specific component. It's actually building that base because, again, you'll have other subjects that you'll need to have a base in before you get into the financial education space. But, again, just helping younger New Zealanders engage and understand with what's available, what they might need, at what part of their life they might need it. In advance of actually having to need it.
And you describe, I just want to caveat the next question. I guess it's all good and well, this perspective coming from Kirk and I, who are, are employed and we have jobs. But you touched on earlier, we have been going through a tough economic period, and your research kind of focused on what said 93% of young adults in the survey concerned about the cost of living, inflation, housing costs. How have these pressures been impacting this group?
58% of the 18 to 25-year-olds said that they would have to rely on their friends and family if they lost their job. If they have a job, they are likely to be in KiwiSaver. They're trying to build some financial resilience, so they understand that. But again, that they might be fairly early on in that process, given where the economy has been, and it has been tough. They have been particularly affected. I think the unemployment rate for 18 to 25-year-olds is either double or triple what the general unemployment rate is. So that is a group of people who have been fairly adversely impacted. And so you can understand that there would be anxiety around A, having a job, and then B, what you can actually do with the money that you get from the job and how long you might have that job for. Yeah,
and I guess, that job is so critical, self-worth.
Absolutely.
It gives you purpose as well. So if you don't have it, you could be drifting, I guess, a little bit. So with that in mind, what are some of the, the job is critical. We know that. Hanging on to that, I guess, is, that's probably 101, right? Making sure, trying to get a job, being good at it, and making yourself indispensable to that employer. But are there any other practical steps young people can take to build wider resilience with what we've been seeing in the economy?
Yeah, I think ensuring that they understand that things might change in the economy, that either pick up or turn down, that they are preparing themselves for that. They receive advice, good quality advice, or they are accessing good quality information from providers. As I say, there are lots of tools, including from providers across the board. Mm-hmm. Specifically talking about KiwiSaver providers here.
Yeah, or Sorted is the other one.
Yeah,
famous
Sorted,
one. Yep.
Amazing. So there's a range of those types of things where they can really help understand what they will need to be resilient and not necessarily have to rely on friends and family. So for some of it, it'll just be, some of the practical challenges is as we discussed, a bit of survival. But what you're seeing is curiosity from this group and commitment from this group in terms of savings. So that bodes well, I think, for New Zealand.
Yeah.
Because they are understanding the need for more resilience. That demonstrates they understand the need for resilience and the things that might change. They're probably seeing, their friends or family or their parents, you might have seen them go through some challenges, so they will be learning from those types of things as well.
Yeah, and we've been around the country doing some regional roadshows as well. We've had, and admittedly the attendees at some of our regional roadshows are not this group we're talking about, so sort of maybe their mums and dads or even grandparents. But we've been asked on numerous occasions, questions by them on how do we encourage kids or grandkids. But conversely, a lot of them have been saying, my kids have already started. Do you have any tips and tricks on things, or we have to be careful what we recommend? But it was nice. It sort of seems that there is that natural curiosity coming through from the younger generation. You talked about, that enrolment part with KiwiSaver being so high at around, was it 96 or in the high 90s?
Oh, it's 50% of the cohort.
Yeah.
But if they're enrolled, they're 96% are contributing.
Contributing as such.
It's a great stat.
Yeah. So I guess if you're in, you're in,
Yeah.
And doing what you need to be doing. But at the same time, this group might carry some personal debt they've had to make, big initial life outlays and things. They might not have necessarily the capital base to cover that. But what's your take, I guess, generally on young NZers and their savings and debt habits, outside of KiwiSaver?
So our research showed that 62% of them would save their money if they got a pay rise. So that's a pretty good statistic.
Oh, it would save the difference that they might have got.
Yep.
So that's really good.
It's good. They also reported they'd pay down debt, save for a home deposit, or invest outside of KiwiSaver before they took a holiday. So
this sounds like me when I was it's like looking back in a time machine.
Yes. Well, I better not comment on my own experiences.
Well, we're just different. We're making a market here. We're differences, right? So they're natural savers.
What's really interesting is that only 18% of them have received financial advice. So it's a really good opportunity for the advisors.
Yeah.
That they want to save and they are hungry for information. I think, as you found in your roadshows, the key thing is making sure that it's affordable and practical for them, and it speaks to them. One other interesting statistic from the research was that 74% of Gen Z had not considered a KiwiSaver hardship withdrawal. So that's really important. And in conjunction with that, first home withdrawals are on the rise with this cohort. So what I said earlier, they're really thinking about KiwiSaver as a springboard to their first home. And they see their first home as helping them develop some financial resilience.
That's really encouraging to hear, because I think in the past I might have heard the odd comment like this sort of there can be a financial nihilism, or there's no chance of me or us affording a home. But if the research is saying actually, you've got savers there and they're using KiwiSaver what it's worth, that's quite encouraging.
I think it's very encouraging, and particularly if you combine that with the idea about how they are thinking about what they do with a pay rise.
Yeah.
Save it, thanks very much, because I might need it.
Correct.
Or I might want it for that deposit for my first home.
It's that I just can't help but think of that old marshmallow test, right? The delayed gratification thing. Like, if you wait 10 minutes, you'll get two marshmallows. That's right. Yeah. And I think, people would wait and turn their head away from it just to avoid looking at it. Is there is there anything that you think providers like ASB or just the general industry or the FSC policymakers, in addition to that financial education piece you talked about, the government uplifting that, is there anything else that the collective we could do better to support these emerging healthy habits?
Definitely. So the research also shows that 69% of 18 to 25-year-olds would consider financial advice. So it is really about making sure that when we're developing advice models, that we're really thinking about this group of people and developing advice that is relevant to them, or types of, loosely say, advertising, but stuff that really speaks to them to draw them in to say, actually, I want to find out more about this.
Yeah.
Because if you go, so 69% say they consider financial advice, but only 18% are getting it. It's a big gap.
Yeah.
It's a great opportunity for providers, I think, and the advisor space.
And we've got to be careful with providers that often we always use the beach, and it's older people walking down that beach and this, like the retirement you deserve. That's not going to resonate. with that group.
Well, also, I mean, I think what that means is you really start to reflect the lifetime approach to this, especially with, as I say, there are big numbers of young people coming through who have now developed savings habits through KiwiSaver, which is a really important part of not just their own financial resilience, but New Zealand's financial resilience. So making sure that they get the best possible advice around that for not just for their long-term future, but for their medium-term future as well.
So before we get into the next section, one thing I wanted to ask was, and you've kind of alluded to it earlier, is what I'm seeing is there's a group of young savers out there, or just, 18 to 25s, they're getting more into self-directed investing, maybe more curious with it. I thought there's part of me that thought it was because they felt the first home was out of reach, so I should save somewhere else. But maybe it's more a curiosity thing, and actually there's more availability, democratization of investing, more information about it, influencing, they're more likely to try it. Is this representative of this whole cohort, or is it just because I'm talking to sort of people who maybe are more attuned to financial services?
I think it's more representative of the whole cohort. Again, that's what our research has demonstrated.
Sure.
So there is more people talking to more people in this cohort than just in financial services circles, right? So that's an important component. And again, I think because it is a generation that has grown up with KiwiSaver, it's been, regularised in terms of the way that it's talked about. It's reasonably simple. It's well understood, those types of things. So I think it has helped. I mean, it's also, as I said, young people talking to young people, oh, I'm on, Sharesies doing this, that, and the next thing. Yeah. Oh, right, what's that? Okay, well, how did you do that? And, as you say, the democratisation of investing, or being able to fractionally invest in NVIDIA shares or whatever that, it makes it much more accessible. So those businesses and platforms play a really significant role in helping actually many people, not just young people, but learn about the benefits and the risks of investing, right? And also how you can manage some of those risks.
Yeah, and I just, for the listeners, they can also use ASB Securities. I just thought I'd add in there for that.
Well done.
Is it, I wouldn't be doing my job if I didn't say, but I guess also just couldn't help but think, as you were saying, that older generations, money was taboo. Is it just now that because it's just more okay to talk about how you're doing, or is it do we think that's actually misplaced?
I actually just think it's more genuinely accessible. I do think it was less transparent, and as a result, certainly for my generation and maybe my parents' generation,
phone, post, that's it.
Well, I mean, I think about even some of the products that were available, and the types of investment products that were available. So they were quite inaccessible, probably quite expensive. You weren't able to get a really quick handle on how they were performing. No. I mean, unless it was through the share market. And obviously there was a period of time of scarring. I mean, we're well past that now. Young people are looking at a much broader array of things that they're able to invest in because, again, business like ASB Securities.
Thank you. Well done. Yeah.
I mean, I think all of those things, and again, things like social media where people can talk to people about it. Now, that won't always be accurate information, so you've got to treat that with a grain of salt, but people are talking about it.
Yeah.
So it's more transparent, less opaque. It's like, we do that behind the closed doors. I think we're a wee bit past those days. I mean, you think about it, right? There's the mythical group of 30-somethings some 20-odd years ago standing around the barbecue talking about property prices, right?
Yes.
So what you have now is they're not mythical. They're standing around a barbecue. They're talking about stock prices, or they're talking about what the investment options are.
Yeah.
It's way broader, and that's quite cool as well.
Yeah. And I guess, what are some of the barriers that keep young people from potentially, that delta you were talking about? What are some of the barriers that keep people or younger people from seeking professional advice? And that could be on like my side, the wealth and investment side, or insurance for that matter.
I think probably awareness.
That you can?
Yeah, and awareness of the fact that you might be able to get reasonably good quality information at relatively low cost. So I think understanding where you might get advice. I mean, again, the research shows that sort of friends and family are the primary source of information and often, advice. I say that in brackets.
Yeah.
That means that they're not, and people that they are talking to might not necessarily be aware or may never have received themselves financial advice. So I do think it's an awareness building opportunity. I mean, again, we've talked about the rise of financial influencers, but again, making sure they're more likely to be looking at something that is half true on TikTok versus going to an actual financial advisor. So there's an opportunity there, I think. And, I'm understating how effective advisors are at connecting with cohorts of people too. So they are using all the tools,
yes,
and they're able to connect with people that way. There is an opportunity with this particular cohort.
And I always think of, like, I've always asked Dad about, like when stuff's going up in the car, you maybe just check, get some information or Dad's view, but I don't get my dad to do the mechanic work.
Fuel. Yeah.
No,
exactly
it's
right.
this kind of thing. So, it's almost like don't have your reference points, but still it's important to seek out an expert to actually probably get the advice or get the change made. So finally, Kirk, the report points to the need for continuing targeted education, making advice accessible, inclusive products. We've kind of hit on all those things, throughout our conversation. They're all critical to helping young New Zealanders thrive financially. What do I guess are there any, or what are the most promising opportunities and initiatives you see for, continuing to empower this generation that's coming through?
Very good question, Nigel.
Thank you. I think it's almost like we'd planned it.
I know. It's amazing. Well, we've talked about building financial resilience. I think encouraging a mindset of lifelong learning about money, and that, we've got the platform with it being included in the curriculum now, financial education being included in the curriculum. So, we've got tools that are available for people to better understand and improve their financial education. I think one of the areas we haven't really talked much about is some work that we're doing to improve access to essential cover for things like life and health insurance. New Zealanders, not just this particular cohort, but insurance is a real opportunity, understanding the benefits, those types of things. We've been doing a bit of work around how we can expand the scope of the market for insurance, ensuring that more people have access to it, particularly, as I said, health and life, being able to communicate the benefits of those things at particular times in their life.
Because that's the relatively underinsured versus general, you're right?
Yeah, versus, so as you said, you're more likely to, and this is true for 18 to 25-year-olds, right, that you're more likely to insure your car than your health or your life.
Yeah.
And in some ways that makes a little bit of sense. However, what we're trying to do is help people understand the benefits of those things. So we've got some work going on in terms of seeking some fringe benefit tax reforms, because the way that more people can access insurance and make it more affordable is to enable more people to access it.
Yeah.
And one of the biggest challenges in New Zealand is that, and it's very different in other markets, we have quite significant barriers. For example, if an employer wants to provide life or health insurance as a benefit to their employees, that's taxed up to about 60%. So it's very expensive. It's a real disincentive. What we're trying to do is get the government to flip that on its head and say there's real benefit and productivity gains here, not just for this generation, but for New Zealanders, particularly lower income New Zealanders, and you can help build not just financial, but you can help build health and financial resilience, and
potentially shift some of the burden from the state to
that's right,
the individual.
There are significant challenges with the healthcare system, and it's really a funding issue, right? So that's what we're trying to advocate for. If those were to change, I think you'd see a really significant difference. And again, we don't always want to be like Australia, but I mean, I think in terms of financial resilience, there's no doubt that Australians are more financially resilient than New Zealanders.
Yeah. Built
into their system in terms of superannuation, you have a life component. If you don't have health insurance by a particular age in Australia, you're taxed at a higher level. There are some
an incentive to get it.
That's right. Well, it's certainly a disincentive not to have it.
Yeah, right.
Those types of things are, important for policymakers to be thinking about, in our view.
Yeah.
Because again, what it does is it enables individuals, households, communities, and then New Zealand to be overall more financially resilient.
And I mean, that's probably one thing that people should appreciate what the FSC does, right? That advocacy stuff, like on their behalf, working to see how they can improve things for everyone. Final question before we wrap up into the recommendations. If you had a piece of advice for a young New Zealander starting out, what would it be?
There's lots of resources available. I think this is sort of a real key word. Get amongst it. It's inexpensive to find out more information about things that can help you build wealth and protect yourself and protect that wealth and your health. And those things are accessible, they're available. Again, I think providers are doing a good job, and that will only get better over time. As I say, I think the advice is get amongst it. Try things out.
Yeah, and I think my one's always just start. Like,
yeah,
30 or 40 years ago, to get that information, you had to go to the mahogany-lined office and have someone who was way smarter than you, whether they were or not, make you feel like you didn't know what you were talking about. Now,
and probably a minimum investment of $5 grand.
Yeah,
so,
correct.
Yeah.
And now it's you can start in the privacy of your own home. You can you can pause My Kitchen Rules or maths, and just actually.
Oh, if you don't know,
all your multi-screens going at one time, and have a look at that. So, Kirk, thanks so much for your insights today and for coming back as well. It's clear that while there's challenges for this group, like there are for most groups, there's also a lot of energy and interest amongst our Gen Z members in this area, and there are opportunities and information available to them. So we'll post links to the FSC report and accompanying support resources in the episode notes. And our final question, now you've done it before, one that we ask everyone, is there, hopefully something's changed since last time we sat to get down together. Anything you've been reading, listening to, or watching that you can recommend?
Yes, definitely. So there's a British economist called John Kay who's published a book called The Corporation in the 21st Century, which really challenges all our perceptions about what business is. So he's a fairly well-renowned British economist, John Kay. Effectively, his perspective is that, the short-term focus on shareholder value is important, but there are more components that make corporations sustainable in the 21st century. He also says that in terms of sustainable competitive advantage, is underpinned no longer by physical assets but ideas.
And IP.
And he uses a lot of examples, Apple and various others. But he says without a kind of clear purpose and that idea that you've got a sustainable competitive advantage and the idea that you are building trust with more than just shareholders, you probably won't win over the long term. And he's got lots of examples that are spread throughout the book. So it's really important. I mean, look, it's not the be-all and the end of but I think it's a really useful reminder of, how businesses are and can win in terms of their sustainability over the long period of time.
And evolve.
Existing. And evolve, well.
That's not, someone would say you go woke, you go broke, but that's doesn't mean things can't evolve with the times.
Exactly.
Right? My one was, we were talking before we got started about, ASB was kind enough to do a big internal event this week, which was really, really rewarding. But we had Nathan Wallace. I'm going to assume psychology, neuroscience, everything. He presented to us, and the focus was on about brain development, and I guess there's also, applicability back to what we do in terms of leadership and working with teams, and in particular focus on development of our kids. And I thought it was really fascinating talk, and the differences between firstborn children and all other born children, boys versus girls. I just highly recommend any of his work. I haven't looked into any of it yet. My wife's done a little bit for what she does, but I'm going to have a look into it based on it. Was just, I think that's, applicable to 18 to 25 when you're developing still formative years. I just thought it was, on point. So I'd highly recommend that. Kirk, thanks for coming back on. And I also wanted to thank the wider FSC for the work and advocacy and research that you do with our industry. So hope you had a good time.
Loved it. As always.
I know you've got a very busy day ahead of you, so I want to get you out so you can, do all the other things you have to do. And thanks to you for listening in and your continued support for the show, particularly to our Gen Zers out there. I hope you learned a little bit more about yourself, because it's always good to hear a little bit about you from people who are older than you. I know that's always well appreciated. And with that, happy Gen Z investing, and it's bye for now. Thanks for listening to the ASB Investment Podcast. If you have any thoughts on this episode, or if there's anything you'd like us to discuss on a future show, get in touch with us at podcasts@asb.co.nz.